All right, we've talked a lot about the recent rally in gold. We've talked about the rally in copper, but check out what's been going on with silver and a huge recent move, something that our next guest saw coming. Daniel Ghali is a senior commodity strategist with TD Securities, and he joins us here in studio. Nice to see you.
Thank you very much. Thanks for having me.
We talk about some of the dynamics that are moving some of those other metals. What's been going on in the silver market?
Well, listen, I think that silver is probably the most exciting trade in the energy transition theme within the commodities complex today. What we're talking about here is a market that has been in a universally recognized structural deficit that most analysts across the world predict will continue to be in that structural deficit, which is essentially driven by the boom in solar capacity across the world and the growing trend of electronics being embedded in really everything that we do, but particularly so in vehicles.
So the deficit meaning that there's just not enough silver to go around for some of these demand needs in different components and that kind of stuff?
Yeah, exactly. I mean, a lot of ink has been spilled on the story for copper, right? We just went through a decade-long bear market, as a result of which there has been a structural underinvestment into mining and metals capacity across the world. And silver is primarily mined as a byproduct of lead and zinc mines, of copper mines, and of gold mines. So there are very few companies that mine silver specifically, and as a result of that, the structural underinvestment into the mining space has resulted in this structural undersupply of silver that we're seeing today.
Interesting. And so ultimately, what do you? When did you first start noticing the trend? Because you've been pretty constructive for a while now here on silver.
Yeah, absolutely. We've been constructive. There's a lot of pieces to the puzzle, right? In this case, this is a situation where we've been in a structural deficit. Most of the time, it doesn't matter in silver markets, and it doesn't matter because the world is sitting on a massive amount of above-ground inventories that can be relied on to satisfy the gap in physical market balances. The difference today is that we think that assumption is going to be challenged in the next 12 to 24 months. We think global inventories are probably overstated when you account for the amount of silver that is actually freely available for purchase. And as a result of that, we're probably in a situation that could lead to some pretty extreme price action in silver.
And is this something that continues, in your opinion, over the long term? Because I think when a lot of people talk about the copper boom right now, they're painting a picture over the next decade based on some of those larger demands that people are talking about.
Well, demand for silver is probably going to boom for the foreseeable future. But we do think that a lot of the technologies that underscore solar capacity, for example, are going to thrift out the silver content over time. So this is more a story over the next year or two, where you can see a temporary squeeze on prices that could relate to substantial gains in prices.
They would just make changes to the equipment components that would mean less silver required for them, almost to like just control their own costs, or?
Yeah, to control their own costs and to ensure the production chain or the supply chain for solar panels and electric vehicles and so on.
Can keep going because you don't want to be beholden to a market where there's only limited supply of a product or higher prices. So a lot of moving parts there. Why do you think this is a lesser talked about story in a very busy market where everybody's busy talking about everything right now? Why do you think people haven't talked as much about silver?
Well, partly because over the last decade, it didn't really matter what supply-demand balances meant, right? That was a decade that was characterized by financial flows dictating the silver price and gold price by many extent. But what we've seen really since the pandemic, and increasingly so over the last few years, has been a trend that physical flows in precious metals have been larger than financial flows. What that really translates to is this theme of central banks accumulating gold, of renewable energy and the electrification of our economy demanding a lot more of these metals.
And so, Daniel, like the stock market rally we've seen in Canada this year, in part through the materials sector, has also in part been because there's been some silver-related plays that have caught the attention now of investors. But when you're talking with clients about ways by which to play the silver boom, how should people think about investing in silver, in your opinion?
Well, there's a variety of ways of investing in it, right? As a commodity strategist, I really do a deep dive on the commodity side of the equation. So there's multiple derivatives that are available. There are, ETFs that are available, and so on as well.
Okay, but we've had a pretty big move. So just which you had had some expectations we'd see a notable swing to the upside. What's your general take on where silver prices go from here? Maybe give us your roadmap from here.
Yeah, what's interesting about the recent run in prices is that it still doesn't appear to be discounting this kind of view that the inventory picture is going to be really challenging over the next year, that you could see a squeeze from the physical market drive prices higher. It's instead been related by a huge influx of capital into the commodities complex, and silver, being a smaller market, has adjusted in price to reflect that capital inflow.
All right.